presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, folks. This is Jacob Shoup filling in for Tom O'Brien. I know he said he'd be back today, but it was incorrect. So you're stuck with me today. Let's take a look at what we got going on in the market. It's got a little pep in its step today, which is actually kind of nice. We have the ES Mini trading at about 4,826, up about 0.69%, cracking over that $4,800 level from a retrace back down to about 4,700. Which is pretty nice to see. The Russell up about 0.18%. We have the NQs up about 0.85%. The Dow futures 0.55%, trading at 37,971. See if we can crack back over that 38,000 level. I know there is some technicians who are looking at it trading back down. You know, you see this in the Dow and really in the ES Mini as well. Kind of a trace back down to this 4,600 area, which is really where we had that massive breakout on a pretty good volume. That was around December 11th. We'll see if that has any kind of staying power, that concept. At least there is some bearish cases to be made. Gold contract about flat today, trading around 2,029. Of course, we had that major high at the beginning of December, trading about 2152. That was very quick, came right back down there to a low about 1988. We'll see if we're kind of traveling back down to that area. That same news, we also have the dollar kind of coming down as well, but still on this kind of uptick. So we'll see if we trade kind of in a consolidation form for the dollar and move back down. It doesn't seem like we might hit the 103 level that we all have been talking about. If this loses its steam, comes back down to that $99 area, that's going to be good for the gold, the metals in general, and the markets. We have silver trading at 23.11 contract, up moderately today. And then we have copper coming back a little bit, almost up 1%, trading at 378. Looks not great on the short term. However, if you didn't hear the interview I had with Basil yesterday, I'd really recommend going to check it out, kind of getting his insight into it. Again, the whole concept with this is you have very large gold suppliers who are looking to get into the copper game. We talked a little bit about yesterday how copper is going to be a major player in this energy transition. Again, short term, there might be some other picks a little bit better. Obviously, we see kind of a retracement here in copper on that short term. But I think long term, this is going to be a pretty interesting kind of metal to get into. Of course, there's been a lot of. This has been strange with the energy markets. Of course, you had nat gas blow up yesterday after having the bottom taken out of it. Earlier this morning, there was a lot of news going on with crude oil. You know, Brent was trading at like 77. Let me see here. I think, yeah, on Jan 10th, you had it trading about $78. It really come back down. We had it trading up almost near 77 very, shortly this morning. But we're seeing it come back down again. These are very volatile within a certain boundary. There's obviously a lot of issues going on in the Middle East that kind of add to that. Libya, which is a major producer of oil, is having some strikes there. And, of course, we are entering cold season as well. In my opinion, this actually, I feel like, isn't as bad as it could be. These, again, not necessarily stable. There's a lot of volatility. But, this is only within some certain percentage. And we do see that reflected in the gas pump or the gas prices, right? It usually takes about like a week or 2 weeks or something for these major changes to be kind of reflected in the pump. And we've been enjoying some pretty low kind of costs here, at least in Florida, all things kind of considered. Give me 1 second here to fix this mic. All right, hopefully that scratching sound stops for you. Sorry about that. Let's take a look what else we got going on. Really, let's take a look here. Bonds kind of flat today. Tesla trading down about 0.06%. Steel Dynamics being very comfortable at that 113 level. The DXY, again, we just went over that, trading at 102.36. Qs at 409.40. Google up pretty all right today, 144. We have Meta trading up nearly 4%. Nancy, if you're listening, I hope you went long on that. I know you like playing Meta there. We have Disney trading at 89.59, Apple at 186.31, and the SPY trading at 477. Let's take a look at what we got going on. I want to look at AMD quickly, right? We had a caller a few months ago ask about AMD, which I thought was interesting, right? Because the whole hand trick was, take a look at NVIDIA. Everyone wanted to get NVIDIA. And we were kind of having our conversation right around here, this $90 level. My argument for AMD was that, yeah, it's not like the cutting edge for training AI, but again, this is what people use to maintain the AI once it's already trained. And I want to say, too, we'll take a look. They just released one of their new graphics card, which is the Radeon RX 7600, okay? So, graphics cards are, among other things that we really know about, right, which is like mining crypto and kind of running multiple processes parallel to one another. This is what GPUs are great at. They're used in video games, right? And this was a major issue that was going on with people who are big. And the gaming industry is massive, right? Obviously, you have like your Xbox, your PS4s, but even on the computer, right? It's one of the biggest markets in the world. And it was getting hard for just general consumers to keep buying new graphics cards because they would be purchased up by all these large crypto miners and people training AI. And so AMD was kind of stepping in and be like, hey, listen, guys, like we are going to provide a cost-effective GPU. It's not going to be able to do everything that a high-end NVIDIA can, but for the consumer market, it's phenomenal. And I think they're finding their niche in that as well, which I think is beautiful for this equity. Of course, we're trading at 148.87 right now. That's just off the yearly high, really, of about 150.97, 150.82. It's pretty good. I think this stock looks extraordinarily solid. I hope the guy I spoke with in around October, I liked it. He was already in the equity anyways, so it was. I hope he stayed in that because this is quite a nice move, and this is big move on volume too. Obviously had this big trace back, and that was on just some news of AI being kind of interrupted at least, but it came right back up. And we're taking a look at the. Let's see here. Let me pull it up. Radeon. And so this is essentially the graphics card they're using that's going to be out there for consumers. And again, if you're a gamer or anything like that, or just doing, basic kind of homework or whatever that needs GPUs, I mean, these are $269.99, right? This is a pretty solid price at home, and that's much more in line with kind of the historical prices of buying cutting-edge GPUs just for kind of like consumer work. Folks, stay tuned. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien today. Take a look right now at Microsoft. Why am I taking a look at Microsoft? Well, OpenAI, which has a huge investment in from Microsoft, has opened up their custom GPT store. So what does that mean, right? Essentially, you can kind of fork this OpenAI, this chat GPT platform, right, to make a bot to do kind of whatever you want to do. And this is really insane, right? Like, in the past, you need to have all this kind of vast technical knowledge of, like, how to code. You need to understand the concepts you're trying to code and everything so you can translate it properly into the language you're using. And, that's how you would traditionally make some kind of bot. Well, with ChatGPT, you don't need to do that whatsoever, right? Because the AI itself understands how to translate all that kind of common idea, right, into technical, and does it all behind the scenes. You don't need to worry about it. This is actually pretty cool. Taking a look over here, for instance, okay, I can give you an example of something. My MMA coach, he has no prior training whatsoever in computer science. He does not know how to code. He worked at a bank for a long time and now is an athletic coach full time. And over the past, I'd say 5 months, he's been working diligently trying to figure out how ChatGPT works and how to kind of code these things together, learning from ChatGPT all around the way, right? So say you want to implement your bot to do something, you can also just ask the bot how to do that. It's actually pretty fascinating. So what I'm trying to say is, if you've never gotten into this kind of thing before, you're not familiar with it, it's not too late to start. I mean, he's like 43 or something. And the idea is he wants to put his bot on one of these stores. This is super neat. It's like a $25 or $30 subscription. Of course, the people who add these bots, they get a cut of that. But I think this is interesting. For instance, you have one here, Grimoire, right? Coding wizard, create a website or anything with a sentence. I mean, that's pretty insane, right? And this is what we were talking about yesterday with this like massive shakeup of people in the past who are usually kind of immune to any large economic shakeup, right? So you look at like web builders. You needed to know JavaScript. You at least needed to know, in the era of Shopify, you at least needed to know how like plugins work, and how to kind of manipulate those. With things like ChatGPT, you're going to be able to just do it yourself, which is really fascinating. Scholarly AI, interesting. It generates new hypotheses, analyzes text, figures. That's pretty fascinating to think about. And I wonder, too, with something like that, you know, humans are so interesting because we can think irregularly, right? Like there are patterns, you know, on the grand scheme of things, everything kind of turns out to be a pattern, right? But we can do things that are kind of chaotic in a sense, right? And in a lot of ways, us as a society try to eliminate, you know, that kind of factor about us, right? Because it's not conducive to like long-term growth. But I think we're going to see something interesting where we might start relying on something, you know, obviously Scholar AI is just some, you know, group of people randomly putting their AI up on the internet. But you think about an idea, I mean, you have a super powerful computer, you know, that can sit there and think about problems all day long and solve all these different solutions. I wonder if we get to a point where everything gets so refined that we kind of lose our touch, right? And then and of course, I'm just kind of like riffing here on it, but I think it's an interesting concept that if we rely too much on these things, you know, they're not human. And we might think in the beginning that it's a really kind of interesting concept and a good thing to do. But I think on some long term, we'll find, well, we might revert back out of this, right? And I do see a lot of, it's kind of counterintuitive, but with like the advent of AI, a world that actually does get increasingly larger. And what I mean by that is, you know, the ideas of like telephones or the internet, the world becomes quote unquote smaller, right? Because you can communicate with people around, you know, the world, and information travels more quickly. But, you know, you have the Davos organization, which, you know, they have criticisms of them and everything, but they released a paper saying one of the greatest threats to stability going forward is going to be misinformation by AI, right? We actually saw that, you know, hit our house, and I mean that like in the markets, a few months back, when someone on Twitter had posted an AI-generated image that the Pentagon was actually bombed or an explosion went off. And this actually tanked the market periodically, right? It was very short term, and when it was discerned that this wasn't true, it did rebound. But I mean, think about that, right? This is a major impact. I've seen things with, I mean, deepfake isn't necessarily AI, but AI can utilize deepfake to make any famous person say whatever they want. I've seen plenty of advertisements online ripping people like Donald Trump, ripping people like Joe Biden, Joe Rogan, all these, which are fake videos, and you can tell if you know what to look for in them, but they're pretty good. And this causes this whole realm of misinformation that's very difficult to kind of get out of. And I think what the consequence of that might be is kind of a reversion to the local being far more important, if that makes sense, right? Because it's more easily verifiable in a traditional or, you know, analog such way. Anyways, that's just kind of, you know, again, some like riffing on that. I think it's kind of important to think about going forward because this AI is going to hit us very quickly. I mean, it already is, right? What are some of the things that kind of stand in the way of kind of advancing ChatGPT forward? Something that was massive, I think you had New York Times and Wall Street Journal try to sue OpenAI because they were training their models on what those magazines or papers were essentially calling kind of intellectual property, right? This is very fascinating. This is coming out of the UK, but it was happening in the US as well. It's amid an increasing number of lawsuits. OpenAI says it's impossible to train ChatGPT without copyrighted material. And this is so interesting, right? Because what the AI is doing is it's able to go out into the internet and pull all this information and learn from it, right? And this gets into a very interesting realm of legality, right? Like, how do you stop something like that, right? If they're paying, let's say, for the service, you know, to access, let's say, New York Times or whatever, how do you kind of parse that? Is it copying them? So this is going through. It's like limiting training data to public domain books and drawings created more than a century ago might yield an interesting experiment, but would not provide AI systems that meet the needs of today's citizens. Training AI models on copyrighted material has become one of technology's hottest topics as generative AI has exploded in recent years. In December, the New York Times sued OpenAI and investor Microsoft for unlawful use of its work to create their products. In response, OpenAI said it believes training is fair use and insisted we support journalism, partner with news organizations, believe the New York Times lawsuit is without merit. Pretty fascinating stuff going forward. And honestly, training AI is going to be a major job in the future and really maintaining it as well. And so to kind of see how this will shake out, I think will be interesting just for the culture in general, right? So, but yeah, if we look at Microsoft here, trading up about 1.92% at 383, I think if we start, now of course the companies are in ways separate from each other, right? But OpenAI does very well, Microsoft obviously does very well too. And so I think having this explosion of these, almost like this subscription model, right, from OpenAI will be pretty positive on Microsoft as a whole too. Folks, stay tuned, we will be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. So some of the big news for today, right? We've been talking a little bit about potential Bitcoin ETFs coming out. Well, Bitcoin's trading at about 45,831 right now. That's down about 2.03%, and it's really been a week for bag holders. So what's the big news for today? Of course, the SEC is kind of talking about needing all these companies to get their filings in to try to decide this. Well, today they were hacked. The SEC account for Twitter, rather, was hacked, essentially saying that it's good to go. And we'll talk a little bit about this. Let me pull it over here. And I'm going to tie this in, too, with obviously some of the talk regarding cybersecurity, and then some news within that industry regarding Juniper and Hewlett-Packard. The Securities and Exchange Commission said Tuesday that a post from the agency on X reportedly approving spot Bitcoin exchange-traded funds was fake, saying its account had been breached. The SEC's official account on the platform, formerly known as Twitter, was compromised, Gensler said in a post from his official account on X. And I'm not laughing. I mean, obviously that's a horrible thing that it got hacked. It's just I feel like that the SEC hasn't been as vocal on this matter as they could have been. They said the only place you should be going to get information on these kind of topics would be the SEC Gov, Twitter. Their arguments against making against allowing for the spot ETFs is a little bit strange, right? And so there's been, and most likely these are going to get passed, right? There's been the conversation that they don't know if the common investor is ready for this kind of exposure and so on. The problem is that if you don't think they're ready for it for these ETFs, they're still going to buy the Bitcoin somehow. And yeah, now, of course, definitely, you make these ETFs, it definitely makes it easier. The barriers to entry to investing in Bitcoin, or at least getting exposure to crypto, is definitely lower. But I think they're in this kind of rock and a hard place, right? Where if they accept these ETFs, they're definitely saying, well, like, hey, these are good things to invest in, or not necessarily good things, but like you're allowed to invest in these and you can make your own decisions on it. And if they don't, people now go out and use any number of methods to get Bitcoin, some of which can really result in kind of bad situations. And furthermore, you know, some of these wallets that they have in kind of firms that, these platforms that trade Bitcoin allow you to buy it from them. I mean, we've seen numerous incidents, at least in the past year, of a lot of these kind of platforms getting hacked and wallets getting hacked and all this kind of stuff. I think they had some report that North Korea had hacked something over like 660 million Bitcoins. And it's interesting. So anyways, Gensler is saying the Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the trading of spot Bitcoin. Neither the SEC nor X immediately replied for further comment. Anyways, kind of just a pretty insane story here. This is the main part as well. The price of Bitcoin jumped from 46,730 to nearly 48,000 after the false Bitcoin ETF news surfaced, and then dropped roughly 45,000. Of course, again, we're trading at 45,831 currently. But that's just to show how wild of a ride that was. And kind of some more news with cybersecurity. You've had, let me try to get the story up for you. Just one moment. Yeah, U.S. retail mortgage lender Loan Depot struggles with cyber attack. You're seeing a lot of, it was the Alpha Group that hacked MGM. This same kind of malware that they're using is getting spread everywhere, right? Now, this isn't this exact thing, but you're seeing a really large uptick in kind of cyber attacks, right? And not even really just exposure to it from these news agencies, but just really a general global uptick in it at a time, again, when these larger companies are decreasing their funding into cybersecurity and kind of NetSec in general, which I think is a bad move. The U.S. retail mortgage lender Loan Depot is struggling to recover from a cyber attack that impacted its loan processing and phone service. In a filing on Monday with the SEC, the company said that data was encrypted by an unauthorized third party who broke into the company's systems. Okay, that's what we saw with MGM, essentially. It said certain unspecified systems were shut down to contain the incident. We were working quickly. The incident bore all the hallmarks of a ransomware attack. Of course, that's when you get all your stuff encrypted. But the company's spokesman, Jonathan Fine, would neither confirm or deny that possibility, but that's the definition of a ransomware attack. The attack apparently began over the weekend, and we're really seeing a lot of that. And the problem is these kind of attacks are getting consistently validated, right? You know, if you're a cyber criminal and you're going to go, you know, encrypt everyone's data and they pay you, you have to essentially decrypt their data. And you say why? It's because if you don't do that, all the other cyber criminals who are also committing ransomware attacks will hit you. And there's a lot of instances of that going on kind of in these ransomware gangs. And so I talk about this. We're taking a look at Juniper here, and I really do believe some of these cybersecurity firms are going to get a lot bigger. Juniper is much more like layer 2 and layer 3 for the network. But I mean, a lot of these kind of layer 2 and layer 3 devices, such as, switches and routers and so on, have kind of built-in security as well. Cisco's huge for that. So if Hewlett-Packard Enterprise agreed to buy Juniper Networks for $14 billion, and Juniper's, the next biggest competitor is going to be Cisco, right? And we all know Cisco. This for $14 billion in a move that will expand its presence in networking, but raise skepticism from Wall Street. HP, a maker of data center hardware, will pay $40 a share in cash for Juniper. Let's take a look at Juniper quickly. Obviously, we're going to be trading up pretty significantly here. Yeah, I mean, talk about massive volume and what a jump. Trading about roughly $29.90 all the way up to $37.58. We can take a look at Hewlett-Packard as well. Trading about $16.34. So $40 a share in cash for Juniper. The company said Tuesday in a statement that price represents more than half of HPE's $21 billion market value and a 32% premium over Juniper's closing price of $30.22. On Monday, before talks of the deal had merged, networking technology that directs the flow of K will be the new core of HPE, which is actually a pretty interesting transition because I think they're pretty well known for making hardware as well. I mean, of course, this is still going to be hardware, but kind of like endpoint devices. This was announced that business line will double in size once the deal is closed. I think this is pretty fantastic. And this is what's nice about it, too. Even though this merger seems like it's two giants kind of moving together, this actually is in direct competition with Cisco, too. And the HP-Juniper combination will disrupt the industry since there has only been one large vendor. Of course, that's Cisco, creating a second option. And it's pretty interesting. Acquiring Juniper will double HPE's networking revenue and increase recurring revenue by about $400 million based on 2023 financial results. The company shared an investor call. So that's some interesting stuff to watch. And I really do think that the hardware developers who are making these layer 2 and layer 3 kind of devices, when the kind of inherent cybersecurity inside of them, right, like the network security gets better and better and better, this is going to take off. I think you'll see larger companies too, and I would argue this isn't like the best position to kind of hold on security, because you should have kind of like a full breadth, full depth of security, but they will buy these products that have better kind of like built-in controls, and that will really be kind of the hardware race of the future, I think, and that's going to be between, I guess, Hewlett-Packard now and Cisco. Folks, stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Take a look here at Tilray. Oops. Tilray has acquired actually a lot of craft brands recently. It's getting shot right now. This stock was really big during the marijuana boom. They had some decent movement up to 256. Of course, now we can see that all wiped away today. They'd purchased a lot of craft breweries. I personally, this company I feel like is in such a dire strait. I don't personally think that craft breweries, and I say this obviously anecdotally, but you know, I have friends of all varying ages and a lot of them, and I see their behaviors, and I don't know if craft brewery is really, you know, in its renaissance, right? I think that's coming back down. I think that was a few years in the past. One of the interesting things, though, I'll say about Tilray is they do have we need to find the company name, but one of the companies that they purchased, the craft breweries, also has a non-alcoholic line. And this is going to be a really fascinating kind of cultural development that occurs going forward, right? I'm 27. A lot of my friends that are at my age or a little bit older as well, we've gone away from actually going out and drinking alcohol. And they have these, you know, I guess what could be effectively described as mocktails, but they're a little bit different, right? They're like these certain kind of tonics, all these different herbs that do give some kind of effect, right? But they're very mild, you know, just something like caffeine would give you. And there are a few bars that are going to open in St. Pete in the coming years that just strictly serve these non-alcoholic, what they call tonics or potions. And one of the brands that Tilray had purchased actually is going to sell these. Now, a lot of the big brands, like Three Sisters and everything like that, are not public and probably won't be for a while, but it's something to keep in mind. We have a few shops in St. Pete that have just opened as well. Of course, this is a very, you know, hip area, I suppose. So you're probably not going to see these take over the country, at least for another few years, but it's something to keep in mind. And I thought that was just kind of interesting, you know, kind of discussion on how the culture's shifting a little bit. We'll take a look here at the December jobs reports, which I thought was pretty interesting. There's a lot of actually interesting news regarding like the general state of the economy. We can talk a little bit about that as well, including the increase in wages compared to inflation, which I think is actually pretty interesting. So the December job report, U.S. economy adds 216,000 jobs. The labor market added 216,000 jobs in the month of December, up from 173,000 the previous month. Surprising Wall Street once again to close out 2023. Economists surveyed by Bloomberg had expected 175,000. It's quite off. Data from the Bureau of Labor Statistics released on Friday showed the unemployment rate was at 3.7% for the month, flat from the rate seen in November. The economists had expected the unemployment rate to tick higher to 3.8%. Key to the soft landing goal is normalization of red-hot pandemic-era labor markets. Nella Richard, ADP chief economist, told Yahoo, what we're seeing with companies is insistent hiring, especially small businesses. It's kind of interesting to think about, right? I mean, the job market is demanding more workers. And if we're seeing wages increase with it, you know, in line, with inflation, I think we might see an era where we kind of resituate how we look at beating these kind of inflation level events. So the share of workers receiving raises above inflation, I mean, that's actually pretty good, right? I mean, inflation's so bad because it erodes your purchasing power, right? It erodes the value of your paycheck. And I just find this kind of interesting. I'll pop it in the chart. I mean, I don't have much to really say about it beyond this point, but I think it kind of puts into perspective too, kind of just where we're really at on a whole. Now, of course, there are a lot of workers as well who are hurting from this and haven't received these kind of things in line with it. But on the general, it seems like the economy is doing okay worker-wise. To that soft landing point, we have Yellen talking a little bit more about that as well. She says, U.S. soft landing underway, low inflation, wage growth to spur confidence. And I think that's valid, right? U.S. Treasury Secretary Janet Yellen said, and this is January 5th, that a soft landing in the U.S. economy was now underway and a sustained period of low inflation and rising wages was needed for Americans. This is interesting, especially coming at a time where we'll have presidential elections in the near future. What we're seeing now, I think we can describe as a soft landing. I think there's still the problem, I would say, of large debt, right? We have this article here from CNBC, and this is a more recent one here. It says 56 million Americans have been in credit card debt for at least a year. We're seeing pockets of trouble. And of course, you have a lot of phantom debt as well, which for some reason really ticked up this past December and even in November, right? This kind of buy now, pay later kind of loan during holiday season, which, you know, I don't think is always a positive thing, right? Especially at a time where we have been seeing Americans use more and more debt in order to pay for these goods. Americans are increasingly leaning on their credit card. Altogether, card balances now total $1.08 trillion, according to the latest quarterly report from the Federal Reserve Bank of New York. Over the past 2 years, Americans' credit card balance have skyrocketed 40%. While Americans are managing their credit card debt pretty well, all things considered, we are seeing pockets of trouble at the household level. More card holders are carrying debt from month to month, and fewer are able to pay off their balances in full. Nearly half, or 49% of credit card holders, carry debt from month to month on at least one card, from 46% last year. The report found that 56 million card holders have been in debt for at least a year. The current environment is tough, of course. Although inflation has eased, there's a cumulative effect here. This also may be a consequence of shifts in lending, overextension, deeper economic distress. Again, I think this is a pretty accurate observation that there are quote-unquote pockets of trouble. Credit card interest rates top 20%. Anyways, I can share that as well. I mean, look here, 20.74% have made minimum payments toward the average credit card balance, which is $6,088. It would take you more than 17 years to pay off the debt and cost you more than $9,000. Of course, not a lot of people are actually doing minimum payments on that unmaxed out, but pretty nuts to think about. All things considered, and it really does seem like we have some V-shaped kind of situation going on here, I would say, like, in the market, right? You have this large swath of the population who is adding on more and more credit card debt, not paying it off, right? Doing these buy now, pay later kind of things, aren't able to get homes because they don't have enough for the down payment. They probably can't afford enough for the mortgage. But then we also see, again, this kind of conflicting information that wages are going up. Obviously, more jobs are being added. And it's kind of interesting. And I think that what that does is it points to this kind of new, I guess, I would say hierarchy, but I don't mean it that way, but kind of new stratum being created. And we see here, actually, mortgage demand surging at the start of the new year, even as interest rates rise. And I wonder if what has happened is kind of, we were talking a little bit before, the last week of December, mortgage demand was actually pretty low. And a lot of the analysts were looking at it saying, well, yeah, the rates are just so high. But I think probably what has happened as well is the prices of homes have preemptively come down in anticipation of a longer environment, a longer term environment with higher wages. You've even had people saying, you know, like Fed Bowman, for instance, saying that soon, rate cuts happening soon might not be kind of the reality. Well, I think what's going on is, again, these housing prices have gone down and now mortgage demand is going to surge. And the idea that if this happens at the end of the year, there might be some kind of refinancing that's able to take place. Folks, stay tuned. We'll be right back.
you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. I had an email from one of our viewers, Paul. Paul, if you're listening, hope you're doing all right. It's always good to receive emails from you. He's just asking what's going on with Bitcoin, the news around it. Yeah, we were talking about that a little bit earlier. Obviously, the SEC Twitter account got hacked, saying that the ETFs have been passed. You know, the people who are into Bitcoin and their capabilities and the impacts that they can make on the world are just kind of a different beast than in the past. A lot of these big kind of crypto enthusiasts are very knowledgeable in networking and just kind of how to, you know, basically crack into things like that. I mean, was that a way to try to convince the SEC to pass it? Was it some organization trying to run the price up of Bitcoin so they could dump it? Who knows, right? Then he said Amazon laying off 1/3 of his workforce this week. Okay, Amazon has laid off quite a few people, so let's take a look at that, right? Cutting several hundred positions across Prime Video and MGM Studios, and Amazon is cutting a lot of people from Twitch, actually, right? And now, what I think is going on with it, I don't know if it's suggesting anything kind of larger that's sick with the economy. More, I think it's indicative of things that were kind of out of control in the economy in the past, certainly during like the pandemic era, right? Where you had these massive hiring surges at Amazon. I think prior to that, too, you had these large companies were just able to really benefit from a very low interest rate environment. They're able to pick these, you know, they were getting, I don't want to say greedy, but they were diversifying, right? Like what kind of services they wanted to offer. And so they're getting massive loans to try to propel these different sectors that they had, and then they were adding employees too. That would have been the number of what those sectors would have been at their full growth. And they weren't at that full growth yet, right? So Amazon's cut hundreds of thousands. In March, Amazon said that it plans to lay off 9,000. That was March of last year. That was on top of 18,000 employees. And of course, they laid off a bunch of Twitch. And I think the answer is they're going to keep these running. You know, they're profitable as it is now, Twitch and MGM. But you don't need that many people, and we're not in a high growth environment right now. So I think that's kind of what's going on with at least things like Amazon. Folks, thank you so much for joining me. Not gonna say when Tom's gonna be back. I think he'll be back tomorrow. Thank you so much for joining me. Take care now.